up 5% in the session today, and I think they have spoken to our people out here at the Chennai plant, out there at the Chennai plant, let me put it that way, about what the quarter was like and what the outlook ahead is. What about international markets and what more, quite frankly. So here's Siddharth Lal in an exclusive conversation with Sumit Chaturvedi post their stellar results, talking about not just this quarter, but the outlook ahead.
The numbers that you're seeing now and which are published, these are all Eicher Motors Consolidate now only refers to Royal Enfield business because of the new accounting standard, our joint venture profitability and has gone now to absolute bottom line. So yeah, all the numbers that you're seeing is Royal Enfield numbers. We've had our best ever sales once again, net income of 1,550 plus crores and a very solid bottom line, an EBITDA of 470 crores, and for the first time we've crossed 30% in EBITDA. So that's a big milestone for us. I guess it's come from, where it's come from is many years ago. All the hard work that we've done over the last decade, it's resulted in motorcycles like this beautiful one here that you see in front of you, the Himalayan, which is really taking off well in the market. It's resulted in motorcycles like those there, which is the Classic 350, which is just absolutely gaining ground even now. And basically what's been happening is because we built a really strong franchise, Classic particularly, Bullet of course is also there, and now stuff like the Himalayan. What's happening is that in smaller markets there's a huge demand. So we are able to go down to smaller and smaller markets across India, and we're able to get dealers and get a franchise there. And out of no market, after setting up a dealership, we're getting 20-30 sales a month in new markets. So that's where that big growth is coming from, which you're seeing in the top line and the bottom line and all of that. Yeah.
Talking specifically about Royal Enfield, going forward, do you think these kind of margins can be continued? Looking at the product mix coming from the higher bikes like Himalayan.
Yeah, so from a product mix perspective, we're not badly off. All of our products do well. It's not like we have one which is pulling it down or anything else. So we don't have major issues on product mix. We are growing. So as we grow, we continue to get economies of scale on the one hand, able to reduce material costs. We're getting operating leverage on the other hand. So as we grow, we continue to expand our margins. Having said that, we're also spending a lot more now. So we've got what used to be attracting a few thousand customers, now we have to attract many lakhs of customers per month, right? Those costs go up. What was a single product line has now become multiple product lines. What was a single small plant has become these huge plants here. So our costs are rising. We're going to international markets where our revenues are low, but our costs are higher right now. We're doing a lot of new things across the board. We're systemizing a lot of things which used to be manual in the organization. All of those take costs. So the costs are rising, but even now they're less than the pace that our top line is going up. So therefore you're still seeing continued growth in margin.
And talking about Volvo Eicher commercial vehicle, what kind of product mix you had in last quarter? What kind of market share you had? And going forward, what is the outlook, especially on the commercial vehicle segment?
So we've had an absolutely phenomenal quarter from a market share perspective and also from a growth perspective in VECV. That's our joint venture with Volvo for trucks. In the first time that we've crossed 6% market share in heavy duty. That was our biggest aim in my last 10-15 years of working in the truck area, was to consistently cross 1,000 truck sales, heavy duty truck sales a month in the Indian market. Last quarter we did 3,200 heavy duty trucks. That's apart from of course the many thousands of light and medium duty trucks, and we crossed 6% market share. So I'm delighted about our performance in heavy duty trucks. We always said that once we cross the 1,000 units a month in heavy duty trucks, we get into the positive and the virtuous cycle where we have more visibility in the market, where our resale price starts rising, our dealer viability goes up, and consumers are more interested in our brand, and therefore we get price realization as well. So all of that hopefully is going to start kicking in now in trucks. Having said that, we're not staying back on medium duty as well. And medium duty we've grown from 32% to 34% market share, which is again a phenomenal rise considering the fact that at the start of our joint venture 8 years ago, we were 25% market share and our big competitor was 50. So there was a 25% market share gap. Now there's a 6% market share gap. So we are slowly closing in on becoming the #1 player in light and medium duty trucks. That's a big thing as well for us.
That commodity prices are going up. What kind of margin pressure you are facing, and when will you take that tough call, or that call of raising prices?
We're getting a lot of efficiencies as well. So commodity prices are going up, but as we scale, we're getting efficiencies. So we're able to get some of that commodity pricing cost increase out through much more efficient processes. Plants like this, suppliers which are co-located, we're getting lower costs all the time as well. Having said that, on the motorcycle side, we do have some price flexibility. We took a price increase in January. We're able to continue to take small price increases every now and then. Till now, it's not affected us. So if and when commodity prices do start hitting us, I believe on the motorcycle side, we do have some flexibility on price. On the truck side, it's a bit tougher. While we've grown well, we've got an EBITDA this quarter in trucks also of 9%, which is really good. The pressure on discounts is still extremely high in the market. So with that kind of pressure on discounts, it's not easy to take much of a price increase. Having said that, we have our ways and means of trying to figure out how to get better realization out of each of our products. So we're still doing well across the board, and we're not worried about commodity price increase beyond a point.
And talking about, again, commercial VECV, government is focusing a lot on emission norms now. There are talks of scrapping of commercial vehicles. What kind of opportunity do you see there?
Well, on the larger scheme of things, we're doing a lot of work now, both on the VECV side and Royal Enfield side. We've rejigged our entire product strategy in order to meet the Bharat Stage 6 norms, which have been announced for 2020. And 2020 is not far. It takes 3 years to develop a ground-up new motorcycle. So we've done the planning of that. We're now executing our product development in order to design products which will meet very stringent Bharat Stage 6 emission norms. So that's underway for now. And we support the government in whatever they ask us for. So if they think we need to scrap some trucks, we'll be there. We'll support that endeavor, and we'll make sure that we provide the new trucks which are required to replace, and any other stuff that's to be done in order to dispose of trucks, etc. That's all part of our program. That's very much part of our endeavor to make sure that as the country grows, that we make sure that the environmental consequences of being a commercial vehicle player or a motorcycle player, that we are cognizant of that and we support in that.